I am the Tofu Golem. Please enjoy the video.
You begin by getting F&O access quickly. Open a margin-capable brokerage account and complete KYC. Once done, enable derivatives trading and sign the exchange agreements so you can trade legally. Next, fund the account with enough initial margin. Check your broker's required minimum, commonly $500 to 000 for small positions. Then verify access to the specific exchange segments and download the trading platform. Finally, practice placing a basic order in the demo or with a tiny real trade to confirm everything works. You now pick the contract and position size deliberately. Start by choosing the underlying, expiry, and strike price. Match timeframe to your thesis. Once decided, calculate position size based on available margin and a defined risk % of your account. This prevents oversized exposure. Then choose buy versus sell strategies. Remember, sellers need higher margin. Use limit orders to control entry price, and check implied volatility and premium versus intrinsic value, so you understand cost and likely movement before committing funds. You execute the trade and then manage it actively. Place the order and confirm execution details and margin impact right away. This avoids surprises. Once filled, set stop-loss levels and target exits, and monitor P&L and open Greeks regularly so you can adjust or hedge in time. As expiry approaches, decide whether to close, roll, or let settlement occur. Make sure you understand assignment risk if short. If something goes wrong, check margin calls first, reduce size, and contact support with trade ID.
Thanks for watching. Consider subscribing if we helped you today.